Good evening, guys. It's Saturday, November 5th. My name is Dave Coker, and this is Talking About Finance, where, we talk about finance. Oh boy, it's so wonderful to meet you here again in this place, where we carefully evaluate the markets in this place, where we talk rationally about building wealth in this place, where we laugh because we're indifferent. We don't care about share prices. We don't care about recessions. We don't care about inflation. All we care about is cash flow, getting paid. I want to get paid. I need to get paid. Everyone wants to get paid. Everyone needs to get paid. But only men and women like us who think differently realize getting paid ain't going to happen by trading. You can't trade and make money reliably in the markets. We realize getting paid ain't going to happen by selling options. You can't sell options and make money reliably in the markets. No, the only way to make money reliably, consistently in the markets is to do what we do in the markets. We buy regularly. We buy stocks, bonds, bullion, cryptocurrencies, property. We buy it all. We buy and we never sell. Markets go up, markets go down. The only constants are driven by mathematics and our faith in the markets and the wonderful certainty that is dividend cash flow. I tell you, there's nothing better than getting paid, getting dividends, and realizing because you didn't spend that money that you got last month, last year, even 10, or in my case, 30 years ago, because I didn't spend that money, because I invested that money. Now, every month, we're getting paid. This is a reward for your faith, for your delayed gratification. And this snowballs, my friends. It's called compounding. And it's the single most certain way to get rich. So last week, the S&P 500 was down about 3.3% on the week. Now it's down about 20% year to date. The VIX traded down from 25.75 to 24.55, a modest drop. And we still haven't had our blow off. Remember, lots of my friends, people I respect very much, say we need about a week of the VIX trading above 40 and the markets cratering, absolutely cratering, before we can call a true bottom. So I'm suspicious about Friday's rally. The 10-year note closed the week at 4.16%. It's up now 0.1% week on week, and it's up about 2.6%. Year to date, interest rates rising, risk-free rates rising, share prices must fall. It's math. Oil closed the week at 92.53. It's up some 5.3% week on week, about 23% year to date. So now we're getting some cooler weather here in Essex. We headed out to the pub today, pints and dinner. I'm recording this and another video and a couple podcasts and then more pints. What a surprise. Because the night is young. We need to see live music. And welcome new subscribers. The routine here is 7 slides for 7 days. What me and about 50 or so bankers, investment bankers, ex-investment bankers, and all-around wise guys are talking about on a private Telegram channel. And I need a drink. So let's rock. Oh, this is a wonderful one. My God, we were laughing about this for a few days, right? Someone took a picture of Greta, blah, 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 and put this stuff over. Now, people you who know me, and I've talked about it a lot, I spent a lot of time on the ground in Africa, sub-Saharan Africa. I was up in North Africa as well. I traveled not as much as I wanted to around that continent. It's enormous. You have no idea how big it is. But this is the most, I can't tell you what a tragedy this is. Because for these Western elites to get their electric cars, they need batteries. And these kids are sent down in these mines. Mostly in Chad, there's a few other countries. They send kids down because the kids can go into the holes quicker and easier and cheaper than it would be if they sent a full adult down. Cheaper than if they built out the mines in a proper style, proper standard, I should say, that we have here in the West for health and safety. They don't do it. They send these kids down Age of 6 is optimal for them to go work in the mines, and they're dead by the age of 16. My God. So every time you look at Greta, every time you hear some idiot going on about zero emissions and talking about electric cars, they're hypocrites. They don't know or they don't care. And personally, I ain't got no time for people like that. It's really interesting. We know Jerome Powell's on a bent, and I've written about this a lot in my banking research I sell, and Wire Services pick up some of it. I post it on Medium as well. And we're starting to see inflation mitigate in many ways. Remember, inflation is a lagging indicator. So there is a school of thought that Mr. Powell should not be so quick on that button. But if you read the most recent statement that he gave, and I did a word cloud, I posted it a couple places, Medium as well, you can find it. I did a word cloud. They're really concerned about inflation. It's all they talk about. Well, actually, no, they talk mostly about the committee. They're trying to make this a group decision. But we know, and I know from my Washington connections, Mr. Powell is pushing it. They want to raise interest rates again. They want to whack out another 75 basis points. Remember, we've been going since March of this year. We've seen huge increases since March of this year. We're starting to see it impact house prices, broad commodities, and West Texas Intermediate or oil. Really interesting to see what happens, but no. Mr. Powell, one of our top men, is in control. He's cold and cortical, as I said here. I don't think so. He seems like a stubborn old git. He really knows that as he continues to increase interest rates, sure, it's going to impact inflation, but he doesn't care because he wants to drive the economy into a recession. He's got some fantasy that he's another Paul Volcker. He's not. But aside from that, we know the Fed's got lots of other problems. Once upon a time, the Fed made money for the U.S. Treasury. Guess what? Over the past decade, we've had a really weird macro. And this is the norm. Normally, the Fed is a cost center. It's returning. And we'll have to see exactly how this all gets played out, guys. These are very odd and unusual times. But take some relief, my friends, and that we'll always have Bitcoin. Now, I really get tired of people blagging on social media, talking about stuff they clearly don't know anything about. And someone was going on about how bad Bitcoin's been for MicroStrategy. So I thought, well, I'm a country boy. I'm not that bright. I need numbers. I need data. I need graphs. And I made me a graph. Here we are. Since Michael Saylor drove all this money into MicroStrategy's money, I should say, into Bitcoin in August of 2020, look at the share price. Look at Bitcoin. Look at the S&P 500, the NASDAQ, gold, bonds, and silver. Once again, look at this and tell me how bad it's been for MicroStrategy to put all that money into Bitcoin. I just don't see it. But then again, I'm a dumb country boy. I look at data and I look at graphs. I look at pictures. Really wild. Guys, the kids are all right. We see younger people want to hold Bitcoins straight from Bank of America. If you check out my blog, FinTech Flash News, you'll see that overnight, Fidelity announced that they're moving into the retail space. They're opening up a waiting list for retail investors to purchase Bitcoin and Ethereum. Good choices. Although, really, there can only be one Bitcoin. But aside from that, guys, and I say that because I've been buying Bitcoin every Friday for years. I am not going to stop. I don't go near Ethereum. It's interesting, but, we got Bitcoin. What do we need all this crap for? We don't. I'm not saying it's one of those oddball coins. It's definitely, and I know a great deal about it. I just don't want to hold it. It's nothing personal. But aside from that, we don't have to worry, because we can hold Bitcoin or Ethereum in our Fidelity wallets. And the kids, as I said, are all right because the kids want to hold cryptocurrencies. They don't want stocks. Might be a mistake there, but give them time. They'll come around. And yeah, Bitcoin winner. Once again, driven by somebody blagging their mouth. I did an analysis of Bitcoin winters. Guys, remember the standard here, or the convention. Whenever you see charts like this that come right off my research, so if it's got coker.me on it any place, it's original research that I've made and sold to my investment banking clients. And then I bring bits and pieces in. This was part of a 1,200 word piece that went out, I'm trying to think when, I can't remember, about 3 weeks ago, I believe. Went out to my clients roughly 2 to 3 weeks ago. I'm trying to think when I wrote it. I can't recall. Doesn't matter. But aside from that, you can see what I've done is I've tracked the Bitcoin winners, the first, the second. And the question was, how long will this Bitcoin winner last? Now, my hypothesis in that research note was that Bitcoin winners are inversely proportional to acceptance rate. In other words, as the acceptance rate goes up, Bitcoin winners should decrease in length. And we know that during a Bitcoin winter, both people and companies are more willing to hold Bitcoin than before for one simple reason. Because when there's a Bitcoin winter, volatility drops really, really, really low, close to zero like we're seeing now in Bitcoin. It's not really zero, but compared to what it's been when it's been like, 80, 90, it's really low right now. And we know acceptance is growing. So yeah, we're in Bitcoin winter. I don't care. Every Friday, you know the dance. Buy Bitcoin, put it in the Trezor wallet. Buy and hold and never sell. It's exactly what we do. All right, guys, it's been a real pleasure this week. Hope you're having an excellent weekend, whatever you're getting up to. It's going to be awesome. Take care, guys. Nice sound.